Welcome back to Upside Down Data. Today I want to talk about what I think people are getting wrong about Chainlink. Link is an asset that has been much maligned on crypto Twitter, crypto X if you want to call it that, and crypto YouTube because of things like this. For example, it getting stuck in this range all through mid-2022, all the way into late 2023. A lot of people just got bored. They said Link is never going to do anything ever again. A lot of people left. Then Link had a really nice rally in November of 23, but then again, it got stuck in this range. And again, a lot of people have now started to hate it, basically saying, what is it ever going to do? It's just stuck in another range. So I want to talk about why I think that is a short-sighted way of looking at Link. And I want to start off by talking about the long-term picture. Why are we even here talking about Chainlink at all? And then break it down, going into a bit more kind of the medium term and short term considerations about why this range in and of itself is not necessarily something to be despairing about like a lot of people are currently doing. So to start off, let's talk about that 1,000-foot view. And one of the things that I think is a really interesting new narrative that's emerging that Chainlink has a very nice seat at the table with is the idea of real world assets or tokenization of real world assets. This of course comes along with not only Chainlink being the predominant Oracle service, which would be needed for these kind of things to really take off, but also CCIP, the ability to bridge across arbitrary numbers of different protocols to move these kind of things around. The idea is that Link is sitting in a nice space and it's already working with a lot of the institutions that would make this kind of a thing a reality. And so what I wanted to talk about was this 21.co report. So this is, if you're not familiar with them, they're an asset manager in the kind of crypto exchange traded products world. So kind of a bridge, they call themselves, between crypto and traditional finance. So obviously a bit of a biased source in that they're very much into crypto, but they put out this report where in one of the sections of it, they talk about what is the addressable market for real world assets, tokenization of real world assets by 2030. That's the time frame they looked at here. And in their kind of estimate, the general range that they give is that their base case is that $6.82 trillion is the addressable market for tokenization by 2030, or that's the size that it will be. And then their bear case, 3.5 roughly trillion, and their bull case just under 10 trillion. And so they give some definitions of how they came up to those things here. I'll leave a link to this report in the description if you want to check it out for yourself. But I think this gives us a good idea of where we kind of sit, that in that longer years out period, if Link will have some role to play in this whole thing, if this were to transpire and this much money were to become tokenized, then it might make the current market cap of just 8.7 billion look like chump change given that massive opportunity out there. Now, I'm not arguing that Chainlink would be directly touching all or nearly or even the majority of all of that money that might be taken up in that space. But even if it's just a small fraction, that might still make this look small. And so that's one of the larger views. Now, obviously, that's still speculative. This has not happened yet, but it's the possibility. And so that's really with crypto. Chainlink kind of stands apart already in the fact that it has a lot of actual usage right now, which a lot of other altcoins don't have. But then it also has this narrative behind it. And in crypto, sometimes narratives mean more than reality, especially if we are going into a new bull market here, then narratives are what can really drive the show. So even though tokenization maybe hasn't been the sexiest narrative yet, like for example, in this run, we saw a lot of altcoins in this part, that doesn't mean it won't become a big narrative at some point. And Link certainly seems well positioned to take advantage of it. And certainly I think it's a pretty easy story to tell people, especially in a hype cycle. If you just point to these numbers, a lot of people would get excited about that. So obviously none of this financial advice. You should make your own opinion about this. But that's just one thing I think is important to keep in mind, that Link already has a lot more utility, or at least Chainlink's already doing a lot more than a lot of other altcoins. And its potential to do even more than that is even exponentially greater. So I think it's important not to lose sight of that larger picture with Link. And that's really the reason why a lot of people get excited about it. But now I want to flip the page a little bit and talk about some medium to shorter term considerations, talking about Link price. And we don't have to wait, till 2030 until we can see Link break out of this range, for example. Let's look at some things that are going on under the hood that might suggest that things are maybe looking a little bit better than a lot of people are saying on Crypto X or here on YouTube. So the first thing I wanted to talk about was that this red box here was actually one I had drawn on the Link chart before this rally happened. And I was trying to identify what is the zone where I'd expect Link to hit some resistance in a rally. And this is exactly where we hit. I basically said, look how important this range was, and this is why I drew the box here. And indeed, Link got up to that box, and that's where it has stalled out and kind of getting stuck at this range, kind of flirting with that general area. So it's not really unexpected at all that we'd get here. And there are other reasons why it's not unexpected that we'd stall out at these levels. So let's talk about some of our models that we have here on the channel and that we have on our website, claritydigital.io. Link in the description if you want to check that out. So this is our long-term UDPI risk model. So basically it cares about moves that play out over months to multiple months, so longer term in its time horizon. And so higher values mean higher risk, lower values mean lower risk. And one of the things you'll notice is that in this rally, we got pretty extended on the long-term UDPI for Link. We got all the way up here to about 3.66. And so at the time I was saying, hey, look, I think Link might need to spend some time consolidating, either have a bit of a correction or just have a time-based correction. I think that's something that a lot of people don't appreciate enough in crypto, that to get a correction, you can either get it a price-based correction where you fall back down, and that can let something like risk reset. But you can also have a time-based correction where you just kind of go sideways, consolidate, that can also let risk cool off. And that's exactly what we've seen. After we hit those super high levels, risk then fell off a cliff. And now is maybe starting to find a bottom down here just above -2, which is coincidentally kind of the high point more or less that we hit through this range here. Has also been a notable level in the past as well. And what this means is that Link has now accrued a lot more long-term upside potential, that if it wants to rally again, look at how much more room it has. Back over here, a lot of people were calling for Link to go up to $20, $30 beyond that during the middle of the hype. I was saying, I don't know about that. I think that's probably unlikely to happen immediately because we just don't have that much more room to move. We're just kind of exhausted a lot of the realistic upside potential for Link at that moment. And indeed, we didn't do that. We just went ahead and consolidated. But now that the long-term UDPI has cooled off so much, now if Link wants to run, it's got a lot more room to work with. And that's where, if you want to see a rally go, you'd like to see a rally start at low negative UDPI levels, not really extended positive levels, getting close to the top of the scale. So this is a good sign. It doesn't mean it has to do that immediately, but it just means it has room to do that now, where it didn't have room to do that back over here in November and December of last year. So that's the first thing I think is really important to consider. A lot of people getting really mad at Link for not rallying further here, but if you just looked at the data, it made sense that that was going to be the case. It was not surprising at all. Okay, so that's one thing we can look at. Another thing that I think is useful to look at is our trend confidence indicator, or TCI. So this looks at the current trend of the asset and tries to tell us, should we believe it? Should we think that it has strength and will continue? Or is the strength starting to weaken? And this happens both to the upside and the downside. So for example, going into this rally here up into November of last year, we see that as price is moving up, the TCI was moving up along with it. That's a good sign. When they go along with each other, so if it's moving up and the TCI is going up with it, that suggests an uptrend that you can believe. But then we saw the TCI fall off a cliff right as we got up here. And that's a concerning sign. That means that this uptrend looks like it is weakening, that it's breaking, and that a breaking of that trend is likely to follow. Indeed, that's what we saw. We went from an uptrend just to sideways chop. But now let's take a look at what's happening more recently. Look at this. Ever since the beginning of January this year, the TCI has actually been rallying up pretty notably. And so what that might suggest is now some strength might be returning to Link. And so with long-term risk having cooled off so much, maybe there's some early sign that maybe some momentum might be starting to build up. So I'll have to keep an eye on it, but that's something, it's an encouraging sign. You much rather see the TCI start to move up in this scenario than it continuing to fall off a cliff. That would be more of a concerning sign. Now, the final piece of data I wanted to talk about was our forecast model. So this looks at the probability of upside 6 months in the future. So it goes from basically 0 to 1, and then it corresponds to probability. So basically, if you're up, for example, here at 0.96, that means that there's a 96% chance of upside in 6 months. If you're all the way down here at 0.09, that would be a 9% chance of upside in 6 months. And you see how this does a great job of capturing these market dynamics. Like in the bull market, see the forecast model hanging out at these high levels, very confident, saying high probability of upside in a 6 month future looking window. But then as we got to the top, it fell off a cliff and was saying, for example, back through here, don't get all that excited about Link. It's pretty unlikely that it's going to be up in 6 months from where it is. And certainly before we had the biggest drop of the bear market, it was way down, all the way down, as I mentioned before, all the way down, for example, 8% and around those levels. But then as we had this range all the way through 2022 into 2023, you see it kind of creeping up, and then really getting excited right here in June of 2023, which was the bottom for Link, and coincidentally, about 6 months before we saw this big explosion. So right on cue, 6 months before, it gets to its most confident level up to that point, and then we have this big explosion in that 6 month period. And now it still remains bullish. It still thinks that a bullish outlook on Link makes more sense than a bearish. Now, obviously, it's at, in this case, 96%, or actually the more current value is about 94%. It's not 100%, but it's certainly better than, for example, being all the way down here. You'd much rather see the forecast model up here than down here. And it doesn't mean that it's going to be a straight line. I mean, just look what happened back through here. The forecast model was very excited about Link, but look at these big drawdowns that we had through here. It was certainly not just up only this whole time. And I wouldn't expect any difference this time around. If we are in a new bull market, I would not expect it to just be all sunshine and rainbows and just up, up, up only. There's probably going to be more frustration, either drawdowns in price, more consolidations like we've seen. But the tenor of the market, the overall position, seems to be leaning bullish very much so now, which was not the case, for example, back through here. So this is another hopeful piece of data that I'm seeing with Link right now. So again, not financial advice, just make your own opinions. That's one of the things that I'm looking at. So when you look across these pieces of data, I think there's a lot of good news that you can see. But as I mentioned, this doesn't mean that Link has to explode immediately. And there's other things that we should also be paying attention to. So just for example, one of the things that happened today is the Fed, the FOMC meeting happened. And not only did they not cut rates, they also said that then the next meeting in March, they're not going to be cutting interest rates either. Asset prices tend to like lower interest rates. So for example, the stock market really didn't like that. S&P 500 down a lot today, NASDAQ down a lot today. The dollar, which tends to be inversely correlated with crypto, so the dollar is doing well, crypto tends to do poorly, is up today. It had been falling off, but it bounced up pretty heavily. So there's some things that in that shorter term, we might have some more things to shake out. And so that's where I'm not just going to say immediately that I think Link is just going to explode tomorrow, for example. I think we might actually have a correction due in a lot of risk assets before we have that rebound. But what I do think is that some of the underlying data, when you just get beyond the emotion and the kind of frustration and the hate that a lot of people are putting out against Link because of its kind of boring price action it's been showing here, similar to what happened back through here, if you look beyond that and some of the underlying data, they're starting to look a little bit more hopeful. And if you take that more zoomed out view, you can also see that there really is that broader picture that we can take into account here. And even if it ends up just being a narrative, narratives are what matters in bull markets. So that's also a hopeful sign. So that's why I personally remain optimistic on Link. And anything's possible in crypto. This could end up not panning out. But if I had to kind of put my money on one side or the other, if I had to kind of make a guess of will Link go up from here or will it go and crash in a new bear market, I personally think the bull market thesis makes more sense than the bear market thesis, especially if the broader market continues to look like it's in a bull market like it currently seems to be. So don't expect a straight line, but that's my personal outlook. So again, not financial advice, you should make your own opinions, but that's what I'm seeing with Link right now. So if you like the content, remember to subscribe to the channel, give the video a like, and follow us over on X. A lot of updates for our models and more over there. And go to our website, claritydigital.io, link in the description, see live data from our models and more.